Thanks a lot, Nitin.
No.
Why don't we start with a quick intro about your background and what you've done before starting this company?
Sure. And before we start, I think thanks video. Like video is also a global auditor. So it's actually when we came in, me and my co-founder, we sent the photo to our video colleagues. My co-founder is also a Michael. So yeah, so when we were entering into the buildings, we sent the photo to our auditors. We're like, okay, guys, come on, send us the final report. It's been some time.
Yeah,
It's good. It's good to be there.
yeah, thank you.
So I'm one of the co-founders of Flow. We started in 2019. When me and Michael, we were consulting before that, and even before that, I'm an engineer, mechanical engineer. Started my career in Dubai, didn't like it, came back to India, joined. You cannot hear? Sorry. So joined like an NGO which was doing microfinance in Mumbai. That is where I kind of started on this space of financing small businesses. So for a good 2 years, we were financing small businesses in the slums in Mumbai, in India, and that is where I kind of got introduced to the idea of small businesses and how these small businesses are so different to the usual small businesses that we look at. So when I talk about small businesses, I mean the corner shops. I mean someone who is running his business, like it can die within 3 years. Usually, almost 60% of them don't survive after 5 years. They usually die. It's usually because of the capital. They usually operate at the same scale for quite a good time. And if you think about the emerging economies, that is where our markets are, which are basically Africa, Southeast Asia, and Latin America. Almost 70 to 75% of the economy is run by the small businesses. Right? So they are so important. So that is where I started in Mumbai. Then I joined a consulting company. We were operating on the same space. We were consulting with a lot of banks and microfinance institutions, helping them to crack the mass market. So I worked a lot in India initially when the whole Aadhaar thing was starting. I was lucky that I got an opportunity to work on the Aadhaar project when the whole NPCI was kind of being thought about. So it was a lot of good for me, who was very young. It was more of an opportunity. I learned more because being a consultant, I think consulting is the best position to be in, especially when you are young, because you absorb so much if you want to, because you can learn so much. So I just learned on all these projects. Then we started working outside India, starting with Africa, in Kenya, where we worked with a large bank called Equity Bank. We helped them to do the whole mass market strategy. And then slowly we were working across the globe. We worked in, like, I worked with other banks I worked with Standard Bank in South Africa, with Bank Colombia in Colombia, with a lot of banks in Papua New Guinea even. So was basically traveling, having the best life as a consultant, where you get paid for traveling and also for learning. So yeah, I was doing that for quite some time, but then, and then I met Michael, my co-founder in Papua New Guinea, when we were doing the policy for the governments. We basically used to work a lot with the governments across the globe, so on the financial inclusion policy. So we were doing the financial inclusion policy for the government, and then that's where we met, and we decided we'll join forces. And we consulted for some time, and then in 2019, when we were in Mozambique on one of the missions, we decided that we want to start something on our own. So that is where, so we went from there to Uganda. We registered a company immediately. Then we came back we registered a company in UK, and then we always knew that, okay, these are our markets, because we want to be everywhere where we were working as consultants, because we know that there is still a huge gap which is not being supplied to by the banks, by financial institutions, and there's a huge opportunity and a huge need which we want to work on. So yeah, so we just started.
So you already kind of answered my next question, which was like how the idea came along.
Mm-hmm.
But if you want to elaborate more, that okay, what did you saw in the market? What sparked between you and your co-founder to go for, to join forces and start this particular startup?
So we worked a lot with the banks. We used to work a lot with the banks, helping them to design the products and even the channel. So, like in Africa, for example, one of the main channel is mobile money. And if you look at their economy, almost like 90% of it is based on mobile money and not through the banks. Most of the transactions are done through the mobile money, right? And so I basically, me and my partner, we have worked a lot with the banks, helping them to build these channels where you can go to a shop and do a financial transaction, like put money into your bank account. So we did that almost across the markets. But we knew always that there is this challenge that the shop has to invest their own money to be able to do it. And then we saw that if we want to work with small businesses, we need to start at a place where we can see something, right? So when we talk about these transactions that were happening at the shop using mobile money, we saw, okay, this is the place where we can start. So that is why we started mobile money agents, because we knew that we can see a lot of data. So like right now, when we finance mobile money agents, we can see every single transaction that they do. And our underwriting is actually stronger than anyone can do on any business. I can challenge any bank on the underwriting, because I do my underwriting based on every single sale transaction that happens at the shop for that particular product. Yeah, so that's why, yeah, that's what we started with.
Okay, cool. Now you got your idea started. You join forces. You hit the ground running. But typically, in a fintech and regulated space, you have, the cost of regulation, right? And a lot of fintech tend to raise upfront to have those regulations or licenses or permissions in place first, right? Can you describe how it was for you first, 100 days, first 6 months, for you to like, okay, we're going to do it, to actually doing it?
I think we started pretty soon, and thanks to the Ugandan market and the regulator, because the Ugandan regulator is very smart. You know, he used to work at the Ugandan regulator, so he so he knew that that is where we can start. So they had a very light license, which was microfinance license, which is not even under the central bank, which is under the microfinance authority. So it's still regulated space, but it's easy to get in. It's not that difficult. So when we started, we applied for licenses in both Uganda and Rwanda. In Rwanda, we applied for a central bank license. In Uganda, we applied for a microfinance license. For the microfinance license, actually, we got it almost immediately, like within a month or two. We already had the license. We started only when we got the license, but we didn't have the tech. So when we started, we we decided that we'll not build the tech first. We actually lent on Google Sheets for good 5 6 months, and before we started building our tech. So when I started building my tech, I used to, for good 1 year, I used to challenge my engineers with my Google Sheet and tell them, okay, this is what I had with Google Sheets. Can you still build it on the app that we have? So that is how we started. We immediately started the moment we had the license.
Okay, cool. And I believe, or I know that your company is completely remote, with a lot of people working in quite a few places, right? Would you like to describe the setup you have at the moment?
So yeah, so UK is like the holding entity, and then we have subsidiaries in different markets. We have a subsidiary in Uganda where there are almost 100 people now, but it's like a structured like a proper bank almost. Like we have the CEO, we have all the departments, and it's like proper like a bank, structured like a bank. And in Rwanda also it's kind of similar, kind of smaller team, around 20 to 25 people. Then we have a big engineering team in India, which is almost now we are at 55. I think by the end of this year we will be around 100. That is in India. Then you have a small team in Madagascar, and now, yeah, I think that's pretty much it. So, yeah.
Yeah, and if I am not wrong, you set up this whole thing
Yeah.
during the lockdown or the post-COVID phase.
During the lockdown, it was basically, yeah, we were in Uganda in India during the lockdown, and we applied for the license. We were still waiting for the license in Rwanda. I think we got the license just after the COVID sort of thing. But in Uganda, we had the license already. So we started COVID, yes.
Cool. Right. So, if I were to summarize this whole thing, it's like you are serving a market where there's a lot of manual, broken processes, lack of documentation, right? Working with people or trying to get people on board in your team during the lockdown phase, so you may not be able to meet them either in person, right? So, and again, trying to do lending on the Excel without the tech, right? With probably a lot of unknowns. Right? What do you think has been the most challenging part for you during those years before you got your product market fit?
Like initially, when we were doing it, like it was basically finding the right people to do it on the ground because we were not able to travel to these markets. And we were also learning, to be very honest. When we started, we thought me and Michael, we will have to do rounds every 3 months to our markets. So we decided that, okay, we'll both do rounds and we'll just manage it like that. But during COVID, we learned that we can actually work remote. So we also learned that during COVID that we can work remote. And then accordingly, we kind of adjusted everything that we were doing to the reality, which was that we cannot travel. So even in India, we had this small engineering team that we had to build, and that was really difficult actually. Finding the people who can manage the business without us traveling to these regions, it was really difficult. But we were lucky in Uganda. Actually, the impact was there, but because of the sector we operate in, mobile money is so central to everything. Because even when the banks were not working, people were still using mobile money to do their transactions. So we still had customers who were asking for credit for mobile money because they were still customers who wanted to pay their bills using mobile money. So during COVID, actually on the business side, we were still running because the need was so much.
Now, the key thing is, generally, like given your setup, you both are based in London, right? London being the fintech, like capital of the world. Generally, a lot of fintech coming out, they would be trying to serve the developed economy, right? How can I build the next prediction market? How can I build a platform to comply for the upcoming new regulation, right? How can I, move the money faster, whatever, right? But you focused on a market which was like completely opposite than what you would have in the UK, for example, or example. What's your view trying to build for a market which is often overlooked, right? And even like, hey, I speak to a lot of founders, and even I do my own research a lot. And generally, okay, you got your developed countries and you want to build a solution there because you got good price point. And then you look for emerging markets like, places like India, China, Brazil, the BRICS countries and, Middle East and so forth. But you went for a completely different end of the market, right? What's your view there? Like, are there this market full of opportunities? Where do you see, if let's say somebody want to do something in those markets, what would you tell them?
We would say these are future markets, but also like being very honest, I have not worked in the developed markets, so probably also I'm not informed of how good they are or they are not. I've only worked all my life as a consultant in emerging markets. I know how good they are. I can only speak for them, not really for the other markets. But our markets are future markets. These are markets. If you look at the demographic dividend, there are so many young people there. All these people are going to be like. If you look 20 years after, what will it be in Europe? Like how you can see like the average age here versus the average age in our markets. There's like a huge difference. So those are the future markets. So we are building for future.
And maybe,
Yes,
yeah,
yes.
maybe one more thing we tell them is the margins would blow your mind. So we make 95% yield on our loan portfolio.
Yeah.
We make a risk-adjusted net interest margin of 55%. Like no banker here can say that about themselves, right? And so we would also tell people here, you can participate in it. You can reissue a bond here. So people make between 10 and 15% depending on what they invest on, on bonds that we issue. So people get an app. They see that we fund the small businesses that Nitin mentioned, small corner shops in rural Uganda. So people feel good because they're doing something, but they also make way more than HSBC, JP Morgan, or even Coutts will offer them on a fixed income product.
And that, when on the other side for the customer, there was like a third-party study which was done across 55 institutions in East Africa. We were the first in terms of the first access. Like most of our customers are the first-time borrowers. Like they have never received any loan in the past, and they have been running their business. So we were the first in first access, and also on a lot of other factors. So we're creating a huge impact at the same time being able to generate a yield that Michael is mentioning, and that is because we're working in a market where there's no one, because it's so challenging. Like if you want to be in that market, you have to create everything on your own. So we created the whole payment infrastructure on our own. It's our own thing. We have no integrations with any third parties. We build everything on our own because there is nothing there.
So just talking of that, right? Generally, again, when you talk of fintech and the payment infra and protocols, then historically you had all the PACs and SWIFT and whatever, right? And then in the last 10 years, quite a few interesting protocols came up. Like in India, for example, the UPI, right? In Brazil, you have PEX, right? And suddenly, in my view, the way they built it was not to copy what was already there, but just to build completely new, depending on the needs of a particular market. And in turn, they ended up creating something even much better, right, than the top players, right? Sure. And slowly, I think there's a lot of talks about UPI being integrated into SWIFT and the Euronet payment systems and so forth, right? So, in your experience in all these countries, have you seen something interesting that could, let's say, were to brought here in the UK or any developed economy, would be a game changer?
I think definitely, like there are some ways in which those markets are more advanced because look for the small businesses, the gap that we see in emerging economies, we still see that gap in the UK. I still see the gap. We have done our studies in the UK. We are still kind of in our mind thinking about whether we should apply for the FCA approval here or not, should we do it in the UK or not. But the demand for what we do in our markets is very much there in this market also. Because it's the same kind of thing. Like people want to work in the developed markets. In the same way, people want to work with the clients who can afford it. Right? But we are talking about clients who actually cannot afford what is existing. They want a new product. Right? They want something that works for them and not really something that works for something which is much. So the demand is still there in these markets. And if you think about something like mobile money, there is a lot to learn even for this work here, because mobile money makes it so easy for anyone to participate. Something like UPI. Right? UPI is such a good example because you can see now in India, there is so much data available on the small merchants. Even someone who is selling like food on the streets, there is data available on that guy. So institutions like us can actually provide an opportunity for this small detailer to also grow. Okay, that is what we do. Right? Our tagline is we help small businesses to grow. That is what we exist for. Right? But things like this make it possible for us to do. Right? And that is what I think is still not, like these developed countries still haven't reached there. Right? There is still a segment which cannot be reached to. And even if you go to small businesses in the UK, even in London, leave anything else, you will still see people walking with, like there are these local people who will go to each of the shops and do savings in cash. I've seen it personally in the UK, in London. People go to these shops and collect savings in cash, and they keep a record on the diaries. So there are these kind of things also happening in London, but we don't note it. So I think that we have to be more inclusive for these markets also.
And this is all about opportunity, where do you want to build and so forth. But right, of course, building a fintech needs a lot of investment. You would have raised from angels and VCs, right? Generally, VCs will say, okay, you got to win the market that you're serving. Did you get those kind of questions?
We used to initially. Initially, we used to get that a lot.
Yeah.
But now, we always used to say, look, we want to build a global company, and we don't want any dependencies for the local businesses on us. Like we don't want us to make decisions for Uganda. So that's why I think now we have passed that. We have definitely passed that, because now nobody questions it, because they have seen our record on how we have built Uganda, how we have built Rwanda. They have seen how we are able to build the tech which is now being used by banks, and banks which are much bigger than us. So now in Zambia, Kenya, Ghana, and now we also signed a contract with Papua New Guinea. We have a contract with Madagascar. There are banks which are using our platform, and we have built it being here. Our engineers are based in India. So now there was a stage where it was like a big challenge. There was always like part of the discussions, but now no one asked for that. Now we have passed that for sure.
Right. Before we come to conclusion, I would just like to open up to the audience if you have any questions for Nitin.
Yeah, you just finished your last. Thank you for the talk, by the way, really interesting. You finished your last statement saying you had a lot of big challenges. Where do you continue to find your motivation to grow and push your company forward?
Just because we want to build it. And we are just too small right now from where we want to be. We want to be everywhere. Right now we are just in 6 markets, and we are just in Africa still. We are starting in Peru very soon. We have already kind of registered the company, and we have a person there. We are building a team there slowly. So we want to be everywhere, and that's it. That's what keeps us driving, because we are just very smaller than where we want to be.
So you're going to conquer LATAM next, then?
Yeah, we want to do LATAM. Yes.
Thank you.
Yeah. Yes, sir.
What are the kind of underlying key challenges? I'm thinking distribution and underwriting models and things like that, but what are they in your words?
Depends on at what level you look at. So there are a lot of challenges. Like initially when you start, capital is always the biggest challenge, especially for a business like us, because it's like fuel for us, right? So you cannot. It's not a software company. It's like we need capital. Right? It's fuel. So that is like the biggest challenge, and it continues to be. And then after a stage, you start hitting a place where the manpower becomes like a bigger challenge. But operationally, like what you are asking, yes, underwriting is a challenge, but not really that much, because we still deal with a segment where we get a lot of data on basis of which we can do a lot of underwriting. It's just that we know it's good. It's difficult to convince the investors initially on the underwriting that we do, because they cannot believe it. They cannot believe it that we can see every single tail transaction. Our underwriting is so strong. It's difficult to build that initial thing with the investors. And on the ground, it's just difficult to keep building the team. We have frauds every year. And it's like there's always a race between the tech team and the guys on the ground. Like, okay, who's faster? Like, who gets there first? But yeah, challenges are part of this game. That's the best part also of building a business. If you don't have challenge, you don't have fun. It gets boring.
So what do you need? Investment?
Yeah, definitely. We need investment and we need partners.
Equity investment or debt for lending?
Both.
But the equity is more pressing. We've got a lot of.
Sorry, which one was?
Equity is more pressing.
Right.
Debt we have huge amounts of debt lined up.
Okay. All right.
Yeah.
Yeah.
So
But
we
so on the equity side, we don't fit into a clear VC bracket because VCs like
Impact investing.
or they like asset light, fast scale. VCs don't really like balance sheet lenders.
VCs will back. The problem is how strong is your competition, because there's one company that came to us and they're turning over 2 billion. And take a guess what their gross margin is from 2 billion. 8 million.
Oh wow.
That is our net margin. So it's possible. So our chat. We can afford to do this.
Yeah, definitely, why not? But that's why we want to grow. That's where we want to.
Yeah.
That's like the next stage. Yeah.
Cool. Yes, please.
I mean, one of the challenges typically in the microfinance or small lending is what is the opportunity is it becomes expensive to lend to that level. The second is the default rates tend to be higher, so you end up having a lot more NPAs. Is that a challenge you also see, or is there?
It's just a perceived challenge. It's just a product design problem, actually. Because when you design for the market, it will work. Right? Our on-time repayment rates have always been between 98 to 99%. Okay? And always been like this, always in that bracket. Okay? And it is because the product that we have designed actually suits the cash flows, it suits the business. We talk in the same language as they do in terms of like the product and their business. Like we have to understand the businesses that we are dealing with. These businesses don't have P&L. Okay? They don't understand what is profit. They don't understand what is balance sheet. They don't even know what are their margins. Right? For them, it's cash flow. Like if I'm running a small business, I will have some cash which I'll use to buy the stock, and I keep running on it. Like I sell the stock, then I know I have extra money, so I buy extra stock. And when I need money for my expenses at home, I just take it from the same cash. So that is how these businesses operate. Right? So first we need to understand these businesses that we are dealing with. And if we design for them, it works. Actually, it works better than the bigger businesses. So this is just a perceived risk, I would say. And that's also a product design issue because no one wants to design for them because it's just perceived as a small opportunity, a smaller opportunity than dealing with a bigger business. Because our average size is $300. Now, if you go and talk to a bank here to do a loan for $300, then it's too small. It's not worth the pain, is what they will say, right? So that is the problem. It's not really the risk is not higher if you design well.
Sorry, just to coordinate. You said earlier though that you're selling kind of technical infrastructure to banks.
Yeah, also.
So why does it work? Why does it work for those banks? On the one hand, you're saying it's too small for a bank. Maybe those banks are different.
Yes, those financial institutions do it because they use our platform. Otherwise, they'll not be able to do it.
Just so we don't lower cost and easy.
Yeah, so we don't only give them the platform, we also give them the know-how, right? Because we want to expand, we want to be present in all these markets. So, for example, in Zambia, when we started with this partner in Zambia, which is like a big lending institution, at least 10 times of us in terms of size, even more actually. When we started with them in Zambia, they were able to see growth within the first 6 months. And they got so excited that they immediately signed the contract with Kenya and Ghana. So now we are doing 3 countries with them, and they also want to do other markets where they are not even there. So it's just a matter of being able to see it, that it can happen. Right? Otherwise, the opportunity just looks small.
You had a question?
Yeah, so you said one of the best things that you did was your underwriting. That's your strongest thing, right? My understanding of underwriting is also understanding your audience and understanding the business, and therefore you're able to do this.
Yeah.
You operated in Africa primarily. I'm sure each of the markets are very different. You're making a leap into Papua New Guinea and to Peru. Very different styles of working, very different cultures, very different things. How are you dealing with that variation that you see place to place?
So I have worked in all these markets as consultants. So I did this product in Colombia, Bank Colombia, which is like the most popular product there. It's called Ahorro La Mano. I worked in Papua New Guinea with a bank there to build the whole channel. So I understand there are differences, but there are a lot of similarities. because end of the day, these are markets with the same kind of people, with the same kind of businesses, with the same kind of challenges. The only thing that differs is a little bit how you do it, what are the regulatory challenges, what does the market understand. We have to just design the product like
For that market.
for that market. We always need local people. We never do it without local people. So like in Peru right now, where we're building a team, all 3 people are from Peru. When we started in Uganda, we started with a local guy who also was a partner in the local business, and we started building a team there. So that's why we have like 100 people in Uganda. We have close to 25 in Rwanda, and now we are building a team in Peru. So in our lending markets, we are doing that. And when we work with the banks, usually they have their teams in these markets. So you always need local people. But I would say, like, they're not really, problem is not very different. Like, we used to work on the same problem everywhere, cracking the mass market and designing products for the mass market. And whenever, as I did a lot of research as a consultant on savings and loans and everything for the mass markets, and the problems were almost everywhere the same. Everywhere.
Interesting.
I believe that's the end. Yeah. Cool. Thanks a lot, Nitin.
No, thanks.
Wonderful. Thank you so much.